I think I should be doing more of trade reviews on weekends, right? So, because this is not just for you to remember, I told you guys, especially when we had the last weekend Zoom, right? I told you guys that this is not just like a signal or just a regular setup group, but you need to learn how it works, right? You need to learn how it works just in case when I'm not available, right? Because sometimes I might be attending to my private mentorship or be outside with my other job, and then I won't be able to be on the chat. Then you'll be able to do something on your own your own self. So yesterday, let me get rid of this. Okay, let me get rid of this. Of this. Actually, don't use this indicator, but I just tried it out for yesterday. But it's a paid indicator. You understand? It's still the same thing that I'm doing, just that maybe when I rush into the chat, if I miss something, it can help me to identify it. You understand? Just like all these lines and all that. It's not something serious. So let's get rid of it first. So yesterday was a very simple clean day. All right. It was a very simple clean day. Just in case if you want to use the indicator, like it's not secret, I can show you. It's you can see the name here. You can see the name. It's actually from T Trades. It's actually from T Trades. Let me show you. It's actually from T Trades. All right, it's this, but it's paid indicator. You understand? It's actually from T Trade. So for those of you that know him, because we trade like almost the same strategy. So, anyways, yeah. Now for yesterday, we can clearly see. Let's use this one. We can clearly see 4 hour. It's bearish. So why look for bullish setup? It's so simple. Like once we get into New York session and we're bearish, I just look for bearish setup. That is just the thing. I just look for bearish setup. In London section, we're bearish. I look for bearish setup. I don't need to look for bullish setup. All right. So finally, price, we actually got to these levels here that I've been talking about. Right. So, you know, I was talking about 17,000 and 17,200. But when I mention it, I said people would think I'm crazy. Then price was still somewhere here. But shit, I didn't swing these things, but it's all good. It's all good. We're gonna catch swings next time. So, anyways, we were bearish on weekly, on 4 hour. We were bearish, right? So, which candle closed? Okay, this candle closed, right? So this candle closed bearish, and we just have to look for bearish setup. The way I told you guys, once the bearish order flow, we have a bearish order flow, we have a bearish candles, so we just have to look for bearish setup. So, oh, what's wrong with my thing? Okay, so this was the first setup that I saw. There was 15-minute order block here. All right. Remember, let's go back to 15 minutes. Okay, my computer is still sleeping. Better wake up, bro. Wake up, wake up, wake up. It's morning. So, if you look here, we didn't have any fair value gap here to push price lower, right? But we're strongly bearish. So we don't have to buy this. But if you catch it, if you were able to buy this, cool. We don't have to buy this, right? So we find our point of interest, which was this first. This was the first point of interest, right? But price will still create that fair value gap. It won't. Okay, so we had the fair value gap going up. I don't know if any of you got tricked in this, but I never called it out. I never mentioned it. You should know reason why I never mentioned it, because we're bearish. If this fair value gap will hold, I would like to see price close above here. Disrespect this one that is lining up with the bearish. You need to first look for the bearish points of interest on your lower time frame first, right? Then when price disrespect them, then now order flow have shifted. Okay, it's the same thing that I taught you guys on high time frame. It's the same thing that I've been explaining on high time frame. All right. So if you look here, right? Look here, 1, 2, 3, 3 bearish candle. Okay, you might say, okay, we close above this one, but that's not enough. We need to close above all of them because we're bearish on high time frame. Okay, and if you look back, you can see where price is coming from. Oof. This computer is testing my patience. You're testing my patience, right? Okay, so if we look at this, we can see that there's a bearish. Maybe I don't have patience this morning because this thing is testing my patience. It's testing my patience. So if we look at this, I think there's something I need to turn off on my computer. Let me see. Maybe this one or this one. When I needed them yesterday, they were not there for me. Maybe this one, or maybe this one that I'm actually using. Okay, anyways, guys. So if we look back here, we can see that price just reacted to this fair value gap and gave order block. All right, there's something that I do teach before, order block and fair value gap. You understand? But I don't do much of that anymore. Anyways, this and this is still continuation. This is a continuation of this, all right? So until price disrespect this and close above this high, you know, highs and lows are being created in fair value gap. Yes, they are liquidity because you also thought that highs and lows are liquidity, right? So, and of course, you were also taught that when we break above a previous high, structure has changed, right? So, and I'm telling you, when we disrespect other block fair value gaps, also structure is changing. So we wanted to see it close above this and above this, then that's when this fair value gap here will mean something to me. All right, but as long as we go in here, you know, you can see when price came back here, it reacted, making those buyers to think that we going up. You know, maybe they might be adding more entries to their entry, blah blah blah. But yeah, they were only looking at lower time frame. So this was our first entry. That's how I came about this entry when I marked it out. And I told you guys, let's also mark this out, right? And another reason why I marked this out, because I got to realize that this other day we missed out. We missed out on a setup. I think it was here. I think it was somewhere here. We missed out on a setup because there was no fair value gap, right? So we don't have to be doing that anymore. So anyhow price come, I'm gonna really look at it very well and then send you guys setup. But one thing for sure is that you still need to refine those entries. If you don't refine them and you lose, that is your own problem. It's not my problem. You understand? My job is to provide the trend for you, show you where the trend is. Then there's many of you that they're killing it with what I'm showing them, and trust me, they only trade in my setup and they make they're making good profit. I get messages that they started becoming profitable as after they joined this trading blue trading room, right. So yeah, so after this so you just need to refine your entry. Okay, let me show you the refinement, which I've talked about so many times. Let me cut this off from here. Let me cut this off from here. So you can either refine it on 1 minute or 5 minutes. All right, 1 minute or 5 minutes. So it depends on you. So if we look here, you can see here nothing happened here, right? You might say, okay, we might have a little fair value gap here, but the low didn't break. And anyways, if you take a loss here, it's all good. It's all good, bro. You just have to find what works for you and stick to it. Nothing is 100%, all right? So, but this is the main entry, because again, we had this low here and price broke the low and closed below fair value gap. So we had an entry here. We had an entry. So once we close below this, you can start. Once we close and you see this fair value gap, right? You don't even have to wait for price to come back to this fair value gap if you don't want to, okay? Because sometimes price might not get to it. You just take your trade, place your stop loss here and target this low, all right? Maybe when price move very well, you can take your 1-to-1 and still hold the main stop loss, so that if price go back up and take you out, that's going to be a break-even trade for you. That's another way that you can manage your trade, because price is not likely to take out this, but if it takes it out, that means you're on the wrong side of the market. We are on the wrong side of the market, and then boom, you let it go. Okay, let me repeat again. You take your trade, price close this fair value gap, right? You take your trade at the close of it, because there's already a fair value gap, there's an inversion, and there is we close below this low also, and we also close below this, making this an order block, okay? So there's many ways you can find your entry. There's many ways, like price cannot print exactly the same thing every day. Like this is an entry also. This is actually a sharper entry, right? If we had this here, once we close above here, I'm jumping in. Then we'll pull back, I'm adding more entry, all right? Then I write target this highs. Then this is gonna be my last target, because we bearish, right? But if, sorry, yeah, we're bearish, so this is a pullback. So if we're bullish, I'm gonna be targeting this lows, or when price gets close to it, I close, which is what I actually did yesterday. Once it was close to it, I closed my trade and let it go, because, bro, I don't know if anyone noticed, the volume is so high. Imagine you'll be risking 170 pips, but of course the risk to reward, it's still the same thing. You understand? You'll be making more also, all right? So at this time is when you reduce your lot size. Reduce it. You need to see how I reduce my lot size, but I still make almost the same thing that I will make when my lot size is higher. You understand? So so this was the first setup, and I remember I told you guys that if you missed the first setup, wait for fair value gap to get formed. Okay, so let's look for that fair value gap that got formed. So so price went down. What can you see? You can see a fair value gap here that got formed. So now we have a fair value gap, right? And what can you see above? We have an order block. This is an order block. We closed below it, so it makes it an order block. So you can mark this as your new high. So remember, my students, I think some of you might also know this, right? This is also an entry. When price goes up and come boom, boom, this level becomes an entry. Okay, this level becomes an entry. All right, but it's not the high probability entry, but it's an entry which you can refine. All right, so now we have that here. Okay, it becomes a point of interest since it's on the higher time frame, and we also have the fair value gap that we wanted to see. Remember, we've been waiting for fair value gap here, waited for it, and it came here. It's still okay, all right? So what happened again? We went back up, and of course, if you go on 1 minute, you will see entry there, the same entry that I explained. So if you go on 1 minute, you're gonna see an entry. This is an entry. We actually closed below this low, but what did I just tell you just now? We had this is an entry for you. Okay, so look at this and look at this. What can you see? Nothing here. We didn't even close below any low here. We're not talking about this side, right? If you wanted to trade this side, your trade will be here. You're taking this trade based on different thing, not based on this strategy, right? Because you might say, what about this? Can I take? Yes, you can take this, but it's a short-term trade. Maybe you're just catching this one candle. Maybe just this one candle. I don't know the reason why you even want to take this from here, because it doesn't tap this. It didn't tap this. There was nothing. If it didn't tap, just let it go. All right. So, but here you can see we came inside and boom, we had an entry. So when this price closed here, you can actually take your entry from here. You can actually take your entry from here, and you're risking 100 pips. 100 pips to make how much? To make 200 pips. That's still fine, you know? That's normal, you understand? But you just know that you need to reduce your lot size. Anytime you see the market doing things like this, reduce your lot size, all right? As long as it's your setup, just reduce your lot size. You still make that same money that you make, right? Because you don't know which one will go wrong. You don't know which one yet. You don't know which one will go wrong. So some might take this here. Okay, some might take this here. It's still fine, but it's more riskier because we just had this candle and this it's more riskier. So if you want to relax with more high probability trade, if you're the type that's okay, you just want to do one shot, one kill, right? You can just take that one. So we have this one and poof, then price dropped all the way here. So that was a two solid setup that we had. Actually, three solid setups. Okay, let me just call it two solid setup, right? So was it three? One, two. Okay, it was two. It was two solid setup that we had here. Let me see. Is that where the market closed? No, okay, yeah, I remember. I took this last one. I think I took this last one. I took this last trade based off what? Okay, on lower, yes, on 5 minute. There was something on 5 minute. Yes. Remember, you can either take trade on 1 minute or 5 minutes. But 5 minutes, there will be another pullback, or you can take it here and just target this. You understand? So, because there's already an inversion up here. So that's what price came back for. Came back for this. And after that, boom, went all down. It went all the way down. Poof, poof, and price closed here. So in this case, right, you're not looking for buy. Not like the buys are not there. But trust me, this buy now, you don't know where you want to close your trade, right? And you'll be freaking out inside. I can see the setups. Remember what I drew for you just here now, right? This was the setup. If I'm going to take this buy, I will take this buy from here. But I'm not going to take it because not high probability. I can take this buy from here. And I don't see any targets here. Maybe targeting this. But the volume was too much yesterday. I can't be risking 140 pips all for nothing. All for something that is not high probability. You understand? So you wait for the high probability one. Then this was another setup. And I think it has something on 15 minutes, which is not clear. But if you look at 1 minute, you can see on the 1 minute price pushed here, we had that entry here, and price pulled back one more time, then boom, drop down. But remember, your stop loss is always at that top, right? If you want a safe stop loss, just leave it at that stop, all right? So I think that was all that happened yesterday. Okay, all that happened yesterday, and hopefully you guys will learn from this. And of course, those of your friends that are having issues with trading can join this group. I just want to reach out, help everyone as much as I can, because trust me, if I have to turn this to a signal group, I can still send you the signal. We lose, we win, but the wins are going to be more, and you're going to be paying more during the week, during the each month, right? So, because a lot of people have asked me for Nasdaq signals and all that, because man, why not do my Nasdaq signal? It's gonna be way high, because I don't do chips, I don't do cheap stuff, because my things are not. I didn't get them easily, you know. So take a very good advantage of this strategy. Okay, it's there every day. It's either you don't see it, or maybe I don't know, but it's there every day. It's really there every day. If you align your stuff well, then you can catch the trade, can do your proper money management, and you'll be profitable. Even if you lose if you lose one and win one a week, you still make some decent profit. Okay. I hope this thing was recording. Okay, it was recording. All right, guys, this is it for today. This was just a weekly review. Unfortunately, it's just one trade that I use for weekly review. Maybe some other time when I have more energy, I can do more of weekly review. This week was actually insane. Like yesterday, especially yesterday. I need to add up something on my arsenal, because I'm still asking myself, why didn't I swing all this? Because usually I'm going to swing this trade and hold for the rest of the week. But I just don't know why I'm not swinging this. Anyways, keep asking myself that dumbass question, but we'll see. Anyways, we're still very, very bearish on Nasdaq. As you can see, we're still very bearish on Nasdaq. Weekly bearish, 4-hour bearish, and we've hit this target. So remaining this target, right? Then we remain in this target, then we can see if we have to start seeing some pullbacks. Okay, because let me look at this candle very well. We haven't retested this yet. We haven't retested this level yet, and also this. So if we want to look for like a possible pullback, it should be coming from these two levels, one of them. But we will see what we have like on monthly. Okay, if we look at monthly now, I think price, it makes sense that price is coming to this level here. So we're just gonna stick to this. I don't see this as liquidity because this is what broke this. For those that do smart money concept, remember I've done that smart money concept before. Like I don't know what's going on there. All right. So, but I like to see what smart money concept traders are doing. Right. Then I will see what I can add to my stuff. Right. So we have this level here. So it makes sense that this will get taken out. This will definitely get taken out. To get taken out, then we have this here where we could like to see some daily reaction, weekly fair value gap, and all that. So I'm gonna make a weekly analysis on my YouTube channel. So I'm gonna talk deeper more about these levels. All right. So guys, enjoy your weekend. Enjoy your weekend. And one more thing that I want to tell you guys is that for those that inactive on their Octa FX, I think this is what I could have started with. Remember what happened the other time when few of you were active? I just closed down the group, open up another one, and you have to send me your account, your fund accounts with fund before I add you back in. I think I'm gonna give you guys a little more time. If the thing is still, because I'm giving you the service like very, very well. So I don't know why you're not keeping your own part of the deal. You understand? I don't know why you're not keeping your own part of, but if you keep doing that, I'm just gonna close the group again, then open up another one. Then anybody can, I don't mind if it's just one person or two person, but I know those that are active and I know those that are inactive. They're just there using other broker and taking my signal, my setups and my teaching. Trust me, there's many mentorship that can't even teach you a strategy that you can just follow the same thing every day and share you set up on that strategy. I can bet my money on that. That's many mentorship that they will just teach you the regular thing that you can find online, and they're not sharing the setups with you. They're not doing trade review with you. They're not, you know. So this is way more than mentorship, but you're not keeping your own part of the deal. You understand? If you keep doing that, you will get kicked out. You understand? You will get kicked out, of course. But it's going to affect everybody. But those who are active can just easily send me their own stuff, their active accounts back. At least how I want to know, I want to see it, like, I want to see it active. You understand? You don't have to use it to trade other trades where you make mistakes and blow your account. Just use it for only mine and see what happens. And see if you're not going to be making withdrawals. We're not doing this because Okta wants to take your money or because I want to take your money. No, it's Okta that pay me for this. All your own part of the deal is you just trade with your accounts. That's your own part of the deal. Trade with your accounts, withdraw your profit, enjoy your profit. That is your own part of the deal. All right, guys. Let's get back to the agreements. Do your own part. Let me do my own part. All right. So enjoy your weekend once again. I know I've said it 10 times, but for the 11th time, enjoy your weekend.